So you think things are heating up, and based on the headlines I'm reading today, I would tend to agree with you. What does this mean for technology?
Well, so number one, we don't think the U.S. China trade relations are going to ease up. It's going to intensify. One of the key issues here is theft of intellectual property of non-Chinese companies. And part of that theft is enabled by cyber espionage. And therefore, to prevent against that, which is likely going to continue to increase, would be to invest in cybersecurity stocks. Best of breed names would be Palo Alto Networks and Splunk. So those are two primary calls that we have here from a note that we published on Friday. Another thing that I think we're going to see is continued movement of the empirical data out of China, i.e. the actual products that are being manufactured in China. So contract manufacturers that are outside of China, those will tend to benefit. One company that we covered that's in that space is called IEC Electronics. It's actually a local contract manufacturer here in Rochester, New York. So these are two primary drivers here. Companies at risk of IP theft, you should see stronger IP protections. A couple of companies that we see that are at risk and should benefit from stronger IP protection would be Western Digital and Seagate. On the downside, clearly, Apple has a very significant China business. Currently, iPhone revenue is projected to, by consensus, to be flat year over year. We see that the ASPs are definitely going to be down year over year. The question is, will you have the volume to make up for it? So what's embedded in consensus estimates is probably a slight rise. You are seeing data that indicates that that is the case. But if we do have an intensification of the U.S.-China trade war and you have a rising nationalism, while the past year you saw Apple withstand the rise of nationalism with price cuts, it's not guaranteed that they will be able to stand further rises in nationalism. So that's a risk that's out there. It's not a major risk, but that is a risk out there.
I mean, Tim Cook has done such a masterful job of negotiating both with the Chinese leadership and with President Trump to this point. But you watch what happens with the NBA, and you wonder how quickly that can spiral out of control just by somebody somewhere saying something.
Yeah, and if you listen to what Tim Cook has to say about the whole U.S.-China trade relations, he is very carefully dancing around that core topic of saying, look, these two economies are intricately linked together. We have to come to resolution. We being Apple, not necessarily the U.S. and China, because really in the U.S. interest, protection of intellectual property should be the #1 priority here.
Your favorite pick out of all of these that you just mentioned would be what?
Palo Alto Networks. They have 50% upside with our price target. It's undoubtedly a best-of-breed name. It's trading at a relatively reasonable valuation for a high-growth name. I think it's around 20x free cash flow.
Why is it such a discount to where you think it should be?
Why is it a discount? I think #1 is that they have been going through a transition from a perpetual license to a partial subscription license.
Right.
Usually there's a J curve associated with that, and so they're going through a little bit of that transition. I think that has led to a little bit of a depression there. If they hadn't been doing that, the stock may be at 250. There would still be significant upside because of the significant growth potential that they are exhibiting.
Do you look at them ever as a takeover target? Because I think to myself of the big cloud companies and think to myself, would you ever want to build that directly into the stack?
Yep. So, it is a $20 billion market cap about. Probably to take it out would be 25, 26 billion. It's not out of the question of someone being able to take it out, but it is a very, very big chunk for someone to take out at this point in time. But yes, it's absolutely strategic.